Welcome everyone. If you can see my screen and if you can hear me, please type a 1-1 in the chat. Welcome. Beautiful. Thank you, Belena Joseph. All right, so we're going straight into it today, and we're going to be pretty well, not so fast, but we're going to just go straight to it. We're not going to waste any time at all today. We'll go straight to the point. Right, so to trade in the market, you just need three things. Well, essentially one thing, actually. You just need one thing, and that is your trade plan. That is what you need. You need your trade plan, which is what I've put up here. You need your trade plan. And in your trade plan, just give me 1 second, please. Okay. So you need a trade plan. And your trade plan has three components in it. Your trade plan must cover three aspects. First is your strategy. Next is your risk management. And then your trader psychology. The trader psychology is seen all through these first two. So it's not like a separate thing. But these first two are the key things. So you need your trader psychology in your strategy. You need your trader psychology in the trade management. So those two work hand in hand, or the three of them work hand in hand to form your trade plan. So if you see any trader and you ask the trader, what is your trade plan? And the person doesn't have a trade plan, particularly, preferably a written out trade plan, then that person is just gambling. That person is just trading. Is not trading like somebody who is a professional. So just like when you want to start your own business, you should have a plan, preferably a written out plan. In fact, the gurus tell us that you need what they call a business plan, right? So when you are trading, no matter what it is, even in life generally, we all have plans. So it is important that you keep your plan. You write out your plan. It is important that we know what your plan is. So let's start with strategy. So today we'll just focus mainly on strategy and a bit of trader psychology. So typically speaking, or generally speaking, every market, though it may seem random, has a structure to it, or what people call price action. Right. So price, when price is moving up from a point A to point B, it does not move in a straight line. What it does instead is that it will move up a little bit, then push down, then move up some more, then push down, or pull back, then push down again, and then go up. Now, this is a market structure. Why is it a market structure? Because we can see, so if I just look at this first aspect here, so what price has done is that it pushed up, pulled back, and then pushed up again. So here is what we call a break of structure, BOS, right? And then at this level here, we call this place a high. We call this place here a higher high. Why is it a higher high? It's a higher high because it's higher than this last high. Now, where it started from here, we call it a low. And then when price was pushing back down, or when it was pulling back, it gets to a level that we call a higher low. Okay? So when price is moving up, we say that just like we have here, we say price moves in a market structure of higher highs and higher lows. And the same thing is true when it's moving downwards. So when it's moving downwards, it has a structure. Let me just mark that there. So it starts from a high, and then pushes down to a low. Now from this low, it then pulls back. From that pullback, my system here. Okay, just a sec. Okay, so we're good to go. I think my system is I'm hearing feedback. Okay, let's see if this is better now. All right. Let's try it this way. Oh, that one is not working very well. Let me try. Okay, I hope this is better. Okay, good. Right, so we said when price is pushing down, it makes a low and then pulls back to give you a lower high. So if you just look at just this first structure, what you have is something like this. Where do I draw that now? Okay, let's do this top here. So it pushes down, pulls back up, and then pushes further down. So you have a break of structure there. So we say this level here is your low, this is your lower high, and this is your high where it started from. Okay, so when price is pushing down or is trending downwards, we say it has a series of lower lows and lower highs. Okay, do we understand up to that level? Just put a 1-1 or 2-2 this time. Put a 2-2 in the chat box if you understand up to this level. Beautiful. Thank you. So we're looking at your trade plan. We're just looking at one aspect of it, your strategy. Okay. So to then move this forward for us, I'm sure because many of us will be asking, so where is the entry? Okay. So let's look at this. Once you see price push up, between here and here, there's nothing to do yet. We then wait for price to pull back and then push back up. This setup is your first indication that price wants to begin to push up, or price wants to start trending upwards. Why do we say that? Because you have a break of structure here. So once you have a break of structure, you can then begin to look for your entries. So according to this strategy here, your entries can be anywhere between this top here and that lows. So this is your higher high. That is your high. So you can enter the market anywhere between this top, this higher high, and the higher low. You can enter anywhere in between here for buys. So you're going long. Okay. Let's remove some of this. Let me put back that high there and higher high. This is your higher low. So once price then comes back down, pulls back, then you're expecting it to push back up. So, so somebody give me any charts that you like us to look at. Let's practicalize it on the charts to see which currency pair would you like us to look at? USD card, beautiful. Why is it telling me it's not found? Okay, there it is. Okay, so this is USD card, 15 minutes time frame. Is it 15 minutes? Yes, 15 minutes time frame. Okay, so let me go further to where it started today. We just want to look at price action today. So if you look at this, if you look below here, when I use my cursor, you can see it's showing me, where is it? 19th. Yes, so 19th, today is 19th. So it started from last night, actually, Sunday night. Okay, so let's look at price action on this time frame. So this market structure is time frame dependent. So on any time frame you go to, you are looking for a break of structure to the top side, or a break of structure to the lower side if it's going to go lower. Okay, so in this case, we can see that price actually went down. So let's see how we could have traded this. So price started from somewhere there, it pushed down, okay? Then it pushes back up, right? It does not go above this level here. Then what do you notice? It just goes sideways and then eventually comes and breaks this low here. Okay, so in other words, let me do this way. A push down, a pull back up. It does not break these highs,
right? So you are still okay. You're not trading, you're not putting in any trade yet until it breaks this low here. Once it breaks this low here, what do you expect next? Remember our structure. It's like this. So once you have a break of structure, what do you expect next? You expect a pullback. So on this pullback here, you could have entered and then it goes further down. And you can see that breaks this level again. It then pulls back in and goes further down, breaking structure again. It pulls back up again and then breaks structure again to that lows. So I don't trade the Asia session. I usually get to my charts around 8 o'clock, which is somewhere around here. So let's say 7:38. Okay. So I will have seen this. The price came down to this level. Then on the pushback, and I'm entering for your sales. Why am I selling? Because I saw a break of structure there. Okay. Right now, so if I ask myself, where was the last price action or the last valid range between these lows here and where it started from? My last range is here. So by the time I get here, I can see that with this candle, I have a change of structure. So price has pushed up. And instead of it to push up and then come back down, it's not done that. Instead, it's taking out these last highs. So right now on this time frame, I am looking for buys right now. So I'm looking for price to go up, pull back down, and then continue going up, as long as it does not come and break these lows here. Do you understand it up to that point? Put a 3-3 if you understand that. Let's say 3-3 in the chat box. Beautiful. Beautiful. That's wonderful. Now, so I said it is time frame dependent. So there are tools you can use to help you see these things. They may not be as accurate, but at least it gives you what would I say? It gives you an idea of what is happening. So I use this tool called the Fluid Trades SMC Lite. Okay, if you have TradingView, you can use that as well. And this is my setting. So all I'm interested in actually is this zigzag here. So this zigzag that is showing there. That is what I'm interested in. And of course, this settings here, this first one particularly. Okay. So let's click OK there. And let's see what it gives us. So can you see that? Can you see the zigzag? So price started and broke this level here. You see, so the way I say a break, so when price, so let's say you have a support and resistance here. Once price goes there, I want to see a body break above and a close above. If it breaks it and then comes back inside here and closes inside here, I would not consider it as a proper break. So this one is a weak break. It closes, it breaks it with a weak. Okay, that's a weak break. So initially, I use weak breaks as my break of structure. But recently, in the last few months, I've started using just the body breaks. Okay, so I use body breaks. Okay, so I want to see a break above and a close below, and a close above. Or if it's in a downtrend, I want to see a break below and a close below. Okay, so let's see what happened here. So price breaks structure there, pulls back. It does not go above that last high. It then goes further down and pulls up and goes further down and pulls up and goes further down. So very easy, nice sales for you earlier this morning on the pound card. Okay. Now, do we have any other charts we would like to check? You would like to check, maybe on the 15 minutes. If you have any other charts, and this time around, we will do a playback so that we can see how we would have traded it. Any other chart we would like to see? And what time frame? USD. Okay. Okay. Can you please mark your entry? I know that some people will be asking for entries. So we'll look at USD yen, but let me just mark these entries here. I said that when price is moving up, if it's trending upwards, once you have a break of structure, your entry is between these highs and this higher low. This is where your entry is. And if price is trending downwards and it breaks structure, your entry will be between this low and this last lower high. That is where your entry will be. So in this case here, you see a break of structure there. Where will your entry be? It will be anywhere between here and here. So all this here is your entry here. As long as it does not break this last high there. It then pushes further down. So if you miss this first entry, you can enter on this next level there. And then that goes further down. And if you missed this entry here, you can enter again on this pullback. Why? Because you see a break of structure there. So you always use this structure as your frame of reference to know which direction the market is going. Okay, so let's look at USD yen. Yes, USD yen. Okay, so what I'm going to do, let's do a bar replay. See what happened in the market. So, so this is today. Please excuse me 1 minute. Okay, sorry about that. Let's continue. So let's look at this. Let me remove all the lines on this, and then we can see what is happening. And I'll also remove the zigzag thing. So today, what has price done? Price pushed up, then came back down. So you could say this is a break. You can't say that. But if you are not sure, let's leave it. Let's say it was just a push down. Okay. So what happened next? We see price started moving. Oh, this is still Asia session. Okay, I want to get to London session first before I start taking any decisions. Let's say anything after 7. Okay, so this is about 7. Okay, so let's see, what did price do? Price from these highs here went down, came back up, went down. So this is a clear break of structure. Do we agree with that? That this is a clear break of structure? If you agree with that, type a 44 in there. Do you agree that that is a break of structure there? According to the structure we just talked about. Beautiful. Well done. Now, so where is our last valid range? Our last valid range is between these lows here and these highs here. So as long as price does not break this high, we were looking for sells, because you can see the structure. This is the structure that we have. So remember, we said the first structure we want to see if we are trending downwards is that price should break structure. So once it breaks structure, we're expecting price to then pull back. So this here is your pullback. As long as it does not break this last higher low, or rather lower high, your last lower high. Okay, so let's go forward with that. Oh dear, I removed the lines. Okay, it doesn't matter. Let's go on. So price is going down. So our first target is these lows here. So if we enter the market somewhere there, right, and put our stop loss right above there, so we have something like this. So the first target has been has done its job. Let's see, do we go further down? Okay, so it still goes down. Okay, let me remove those lines now so that it doesn't obstruct what we're doing. Okay, so now that price has moved to these lows here and broken this one here, right, with a body break, where is our last range? Technically speaking, I can use this level here as my last range, or somebody else may just use this high, depending on how they are looking at the price action. So let's see what price does. Let me use this line to mark my structure. And I can also say, alternatively, this is the second level I want to see price get to before I decide whether is a break of structure to the top side or not. Okay, so we'll use the two. Okay, so we go, it goes up, goes down. So in this case here, we're still in a sell. Is going up and down. Is going up and down. It's not broken above my high yet, so we're still okay. Okay, it's going down. Oh, it looks like it wants to go up. Okay, on this candle here, only just, okay, let's see if we can get a better close above. Okay, so it's going down. This thing is, so essentially it's just going sideways actually. Okay, so it then concludes somewhere there. So this is about now. Okay, I see. Okay, so let's recap what it has done. Let me bring that fluid trades thing. Let's see. So if I zoom in a bit, so this is your break of structure to the downside. So you'll have entered, okay, so this is the first break of structure here rather. So perhaps if you got this, you'll have gotten entry maybe from somewhere there. If you are trading a London session and it just pushed down. So on this push down now, it did not get to these lows. Rather, it meandered and sort of broke here, but it just broke just at the tip there, right? A break above. So this will have given us a change of direction there. But essentially, you can see that it's still moving sideways, right? It's still moving sideways until I get a proper break above here. Then I can look for a pullback and then go up with it. Okay, but this is on the what time frame it is? This is on the 15-minute time frame. Supposing I said that let's look at let's say 1 hour. I don't know what 1 hour will look like. 1 hour will be a bigger we have to look at the bigger context. Okay, so 1 hour, we have to look at previously, what did it do? So let me remove these lines here so that we don't get confused with it. So we're going to mark our market structure. So clearly we can see a break of structure here. See, price pulls up, breaks structure to the lows. It pulls up again. It comes down, but it does not break below. You have a wick below, right? Then eventually it breaks to the top side here, pushes up, pushes down, then goes up again. Then, as at today, you have a break of structure there. It pulls down, it pushes up, and then pulls back down. So right now, your last valid range is between these highs here and this level here on the 1 hour time frame. So remember I said is specific, this market structure is specific to the time frame. Okay. And if you look at even, let's say 4 hour, I don't think you may get something right now. Let's look at the 4 hour time frame. Let's remove all those lines. So you see what you have. You then have to look at backwards to look at where it started from, right? See a nice break of structure there. A push down, a push up, nice break of structure. You enter there. Then it gives you a nice trend downwards. It pulls back. It does not break your last structure at the top side, your last lower high, and then it pulls down, right? And then pulls back up, then eventually pulls down, right? So here, once it gets here, well, technically, you can use either these lows here or this one here. If you use this one as your last lower high, then you're okay for your sales. However, if you use this one here as your last lower high, then you will say you have a change of trend there. Then you are looking for price to go further up. And if you entered your buys around here and your stop loss is somewhere there, maybe you'll have been stopped out as at today. Okay. So it always has to do with the structure. Is Fibonacci useful? Well, you can use it. It's just that sometimes I find that, well, yeah, let's just put it that, yes, you can use it. You can use Fibonacci. Let me see, where's my Fibonacci here? So let's see, look at this. If I mark this something like this. So I have a nice pullback and then price just went down there. If I put another one, I just find that sometimes it doesn't really get to those numbers that I want it to get to. So if I wanted it to get to 618 every time, it will not get there sometimes, and then I miss the trade. Or sometimes I say I want it to just go. Sometimes, market will just give you a shallow pullback. Where is this now? It will just give you a shallow pullback and then continue upwards. So it does not always give you a nice pullback like this before it goes up. Or if it's a downtrend, it does not always give you a nice pullback like this. Sometimes it just give you a shallow one and then something like that. So I want to also be part of this trade, right? So depending on how you want to use it. But yes, the Fibonacci can be a helpful tool that you use. Any other questions? Because that is all we're doing today. It's just to show you that all you need for your trading is to have a trade plan. And in your trade plan, you should have your strategy, your risk management, and trader psychology. Okay. So questions, do you have any more questions? So for instance, if we wanted to look at pound USD 15 minutes chart to see what happened today, 15 minutes. Let's see, it's not coming up. Let's move that, it's not going. Okay, 15 minutes chart. So look at this. Let's bring this one and see if it is if it works out well. No, we don't want that. It's fluid trades. Okay. So you can clearly see price started there, pushed down, went up a little bit, pushed down. They have a nice break of structure there. And in fact, this one does not, you can see, in fact, just what we're talking about. Look at this, it does not pull back deeply to go up. It just gives you a small pullback there. I actually missed this trade actually today. I remember now, because I was looking for it to pull back a bit deeper. So I actually missed this trade. Okay, which is okay. It's all right. It's all right to miss some trades sometimes, right? But it will have been nice. So it went up and then pulled back again and then went up again, right? If you look at this on the 5 minutes, you see how it looks again. It's a bit different to what you have on this 15 minutes. You will see a lot more market structure. So on here, you see what we are saying. So initially, it did a lot of up and down there. Eventually, it broke structure, pushed up, pulled back, pushed up again, pulled back, pushed up again, right? And then pulled back, right? So on this pullback here now, we have what we call a market structure shift, but that's not for this class. So just know that there's a way to also enter this market, right? But at least you will have seen that that same structure that we've been talking about, that if market wants to trend upwards, all we need first is a break of structure here. Once it breaks structure and gets to a higher high, we want to then enter the market on this pullback to go up with it. And then if it's going to be a trend downwards, this is all we need, this structure. A break of structure there. And then on this pullback, we can then enter for ourselves. Okay, that is all you need. So your assignment for all of us today is to go to your charts and look for those break of structures and then determine for yourself where would you have entered the market after that break of structure. And there you have it. This repeats itself over and over again on any time frame that you use. Okay, if we go to the daily charts, let's go to the daily charts. You will see the same thing, this up and down movements, this market structure happening over and over and over again. Okay, So look at this now. Since January, look at what market has been doing. Let's say we start from down there. It pushes up, pushes down, pushes up. Break of structure. All right. Then push down again, pushes up, pulls back down. It does not break this low here, though it went a bit sideways. Pushes up again. It then goes a lot sideways again, and then pushes up. Then it breaks structure here, as if it's going downwards, but there was no follow through. But it's definitely a break of structure, as you can see. Right? So on that, it then pushes up and breaks structure to the top side there. Right? So right now, we are in another range, essentially, because it's just been moving sideways. Okay? We can't see a clear structure there. Okay? After this break here, it's just moving up, moving down, moving up, moving down within this range here. Okay? Okay, so I have a question. Does this mean we don't need top-down analysis? So there's a general notion that it is better if you're able to look at, say, a daily chart, 4-hour chart, then you go to your lower time frame to take entries. That is fine. But we know traders who trade on only one time frame. They don't go to a higher time frame. They don't go to any other time frame. They just stick with their time frame that they are trading. Okay? So, and they are trading very well. Okay? In fact, one of my mentors, Kim Compros, you can check her out on Twitter or Google her name, Kim Compros, from Price Action Traders Institute. Right? She trades on just 15 minutes time frame. You know, she doesn't do any top-down analysis or anything. So it works whichever way you want to do it. It works. So whether you do a top-down analysis or just stick to one time frame, it works. Okay, so let me see if I can even get pound yen, because that one too did a change of direction today on the lower time frame. So let me go to 15 minutes chart. Or rather, no, 5 minutes, 5 minutes. Let's go to the 5 minutes. We can see it clearer there on the 5 minutes. Yeah, okay, 5 minutes. I wanted to say 6 minutes there, but it's okay. So on this time frame, you can see what happened here. Right, so around London session, you can see clear break of structure. So price pushed down, pushed up, pushed down, pushed up. Nice break of structure there. So what do you expect once you see a break of structure? You expect a pullback. So eventually price pulled back. It didn't pull back that much. And then it goes up. So if you miss this first entry, on this pullback here, you can enter again. If you miss this first one, you enter, it goes up again. Another break of structure. So what you're expecting next is another pullback and then push up, which it does again, right? It does that again. This time around, it does not get to that highs, but instead, it breaks this low here. Okay? And then it goes up here. It Now, this is what we call liquidity. So we're not going to even go into liquidity sweeps here now. But anyway, it gives you a double whammy. So it breaks structure down here. And then according to our plan, let me see if it actually breaks and closes above there. What do we do? Let's expand this. How do we expand this? Okay, let me increase that. Let me see. Okay, so when I put my cursor up there, I can see that price just wicked it. So it's not a proper break. It doesn't have a body break. Okay, so from this now, so that's why you should need to pay attention to this. But that's a nice liquidity sweep, right? Then it changes your structure. You can see it, right? Nobody needs to tell you what is happening. You can see it with your eyes that this is a break of structure right here. So on this pullback, you're expecting to sell, right? And that's why we always say, don't put your stop loss so tight. Give it some breathing room, right? So it then goes up and then comes back down. And then it goes up and comes back down, right? So on the 5 minutes, right? This is trading on just the 5 minutes. I'm not looking at what is happening on the 4 hours or daily or whatever. I'm just following the market structure according to 5 minutes, right? You can also use, if you are using 15 minutes, you follow the market structure according to 15 minutes, right? So it will be slightly different. Let's see what it did today. Where is it now? So today, we have something like this. So you can see your break of structure to the top side. And it just goes all the way. Okay, small pullback here, and then pushes up. Then pulls back, pushes up, pulls back eventually, breaks that structure there. On this one here, on this pullback here, you enter for your sells. And right now it's just going sideways. Okay, so that is what it keeps repeating itself over and over again. So if you're looking for an uptrend, wait till you see your break of structure. Once you see your break of structure, then you can enter there, between there and there, between the higher high and the higher lows. If it's a downtrend, all you're waiting for is a break of structure. Once you have a break of structure, you expect a pullback that does not break the last lower high. Okay, so you enter between that level, and then look for price to go further down. All right, beautiful. Do we have any other questions? That is it for today. So you should start practicing this. Okay, someone is asking if there's any other confluence. You don't need any other confluence. This is the basic structure. By the time you start getting into the advanced classes, because we also have the Skyvision Academy, where we teach these things fully, and we start talking about engulfing candles, kangaroo tails, dojis, and all that. But that is all advanced stuff, right? But the basic thing you need that you can start implementing right now is having a market structure, that you have a market structure that you can implement. You can put that in your strategy. So remember, this is just one part of your strategy. We said in your trade plan, you need your strategy, you need your risk management, and trader psychology, right? You need those three to work hand in hand. So we've just looked at strategy here now. We've not talked about risk management and all that, okay? I'm sure we had a class maybe in January or something that talked about risk management. I don't know if that was recorded, but it's somewhere on the platform, on my YouTube page, right? So maybe sometime we'll look at risk management. But in terms of strategy, is so simple. You don't need any other confluence, and you can use this on the particular time frame that you are on. Okay, so it doesn't matter whatever time frame you are on. all you're looking for is a break of structure. With that break of structure, you then determine what direction market is going. Okay, beautiful. Let me see if there were any other questions I missed. Oh, okay. That tool is that same tool. I showed us that tool. Is the fluid trades. This fluid trades. It marks some levels to the top and to the lower side there. I'm not really interested in those levels. Those are not what I'm interested in. It's the zigzag that I'm actually interested in. Right? Is this zigzag that I'm interested in? Those levels are like so. Is this uses what's it called now? SMC, right? But I'm not really trading. I'm not trading SMC, supply demand zones, and all that. Though when you look at it technically, it looks like it's following that structure, but really all I'm interested in is this zigzag formation. That's all I'm interested in. And I use a 4 or a 3 sometimes. Sometimes I even use a 5, depending on the time frame that I'm on. Okay. So, but the main thing I'm interested in here is this zigzag. Okay. But it's called the Fluid Trades SMC Light. And it does mark it quite nicely. So I can see direction of the market, at a glance. Okay. And I can mark where my break of structures are. Right. Particularly for those of us that like to trade the lower time frames. Okay. Beautiful. Any other question? Okay, so if we don't have any other questions, we'll call it a day. So go and practice. Practice, practice, practice. That is how you get better. And that's how you improve in your trading. So remember, this is just one aspect of 3. You have risk management and, of course, trader psychology that I need to keep looking at all times. But this just talks about the strategy part. Okay, thank you very much. And we'll meet again next week. Let's see if one of our guests would, one of us here too, will be taking us next week if they're available. But today, I thought we should just do this just to remind us again. Okay, beautiful. Thank you very much, and do have a lovely week ahead.